Welcome to today's video, and today's video is prepaid expenses, one of the adjusting journal entries. And it doesn't matter what order you watch these in, but there are the four types of adjusting journal entries. A prepaid expense is exactly like the name says it is. As you can see by the definition up there, a prepaid expense is any item that the business has paid for in advance. Examples would be like prepaid insurance. You know, with insurance, I would love to buy my life insurance at the end of the year because if I'm still alive, I won't buy it, right? That, of course, is why we have to pay for insurance in advance. Other examples of prepaid expenses would be prepaid advertising, supplies, prepaid rent, plant assets, and any other asset you can think of that a company might normally pay for in advance of using it. When the organization buys a prepaid expense, it is actually an asset at that time. For example, when you pay for your auto insurance for the next year, when you pay for it, when you buy it, it's an asset. You have the right to that automobile coverage for the next year. So with a prepaid expense, we initially debit the asset and credit cash. And then as we use the prepaid asset up, it becomes an expense, doesn't it? And so that's what this video is all about. Let's set up an example here. And as usual, we have Kid Company. It says Kid Company accounting period ends on December 31st, 2010. Anytime you do a prepaid expense or any adjusting entry problem, you always need to know when is year end, because that is when we make the adjusting journal entry. So in this case, it's December 31st. An analysis of insurance policies showed the following. We've got three different policies here. And you will have a problem very similar to this, and it typically gives students some difficulty, and that's why I wanted to cover this particular example, or this specific example. Anytime they give you three policies like this, you need to take them one policy at a time and determine how much insurance has expired, how much of the prepaid expense insurance has expired as of the end of the accounting period. Well, let's look at policy A here. And you look at policy A, we purchased it July 1st, 2009. Now keep in mind, we're in the 2010 accounting period, okay? We're in the 2010 accounting period, so we actually bought this policy last year. When we bought this policy, it covered us for the next 24 months, and our cost is $20,000. Well, what we want to know is how much of this policy expired in 2010. Or another way of saying this is how much of this policy did we use up in the accounting period 2010, which of course is 12 months, right? Well, how much of this policy did we use up in the period January 1st, 2010 to December 31st, 2010? Well, obviously we used up 12 months of the policy, didn't we? 12 months of the policy is half the policy because it's a 24-month policy. The cost was $20,000. So what was our insurance expense in the accounting period 2010 for policy A? It was $10,000. It was half of it. All right, let's go to policy B. Policy B, we purchased on March 1st, 2010, so we purchased it in this accounting period, March 1st. It's a 12-month policy, and it cost us $24,000. All right, how many months of this policy were used up in the current accounting period? Well, it's 10, because we bought the policy on March 1st, 2010. It is now December 31st, 2010, so we used up 10 months worth. Okay, let's translate that to dollars. Well, you can see it's a 12-month policy that cost $24,000, so we made it a nice easy calculation there that this policy expires at the rate of $2,000 per month. If we used up 10 months worth, by my math anyway, that's $20,000 cost. So policy B, we have $20,000 of insurance expense in this accounting period. All right, let's go to policy C. Policy C, we purchased on October 1st, of this accounting period. 3 months coverage. It's only a 3-month policy, so this is a relatively short policy, and it costs us $5,000. How many months of this policy were expired in this current accounting period as of December 31st, 2010? Well, we bought it October 1st, so all of October, all of November, and all of December. 3 months worth of this policy, C, have expired. Well, it's only a 3-month policy, right? So that means all $5,000 of it has expired. So our total insurance for our total insurance expense for 2010 is the $10,000 from policy A, the $20,000 from policy B, and the $5,000 from policy C, a total of $35,000. Okay, now, what adjusting entry do we always need to make for a prepaid expense? Well, we always need to debit the expense and we need to credit the asset because we don't have as much prepaid insurance as we did at the start of the period. So we're going to debit the insurance expense for $35,000 and credit prepaid insurance for $35,000. So the key, regardless of whether it is insurance or advertising or whatever the prepayment may be, the key is to determine how much of that prepayment has been used up during this accounting period, or how much of that has been expensed during this accounting period. And you make your adjusting entry. You always will debit the expense for that amount and credit the asset. All right, there is one other type of prepaid expense that is handled a little bit differently, and that is a plant asset. A plant asset is a long-term tangible asset. In other words, it's not just going to last a year or two, like a building, maybe last 30 years, or a vehicle 5 years. So it's a long-term tangible asset used to produce and sell products and services. So it's a little bit different situation here. What we do here is we do something called depreciation expense. Depreciation expense is where we're recording the using up of the usefulness of this plant asset. And we're going to spend a whole chapter later on plant assets. So that's that. We're going to save some of that for a later chapter. But the adjusting entry to record this depreciation expense is very simple. You just simply debit depreciation expense and credit accumulated depreciation. So that concludes our exercise video on prepaid expenses. And as you can see from the video, they're nothing to fear. They're pretty easy. Post your questions on the discussion board, and we'll see you in the next video.